You're watching Business Incorporated live from Channels HQ. Coming up, Algeria's non-oil exports exceed $6 billion, the highest achievement since its independence from France in 1962. And Ghana's economy grew at the slowest pace in 2 years in the third quarter of 2022. The Central Bank of Egypt expected to raise its overnight interest rates by 200 basis points next Thursday. Thank you for joining us. I'm Ladi Williams. Let's kick off now with the market starting on the African continent. We see it's mostly positive sentiment right here. We see the NGX, last time I checked, up 0.07%, and South Africa's index there, that was up 0.58%, 72,491 points. Over to the Northern Africa there, we see Egypt. That closed, that's down at intraday, 0.75%. We see Kenya closing down yesterday. All right, now let's take a peep into what's happening at the NGX. We have Mr. Rotimi Fakejo, equity trader at the NGX, join us via Zoom. Great to have you on the program.
Good afternoon.
Yeah, so last I checked, the market was in positive territory, but marginally. What's happening right now?
Well, it's still very much marginal, but I think the banking sector is actually the sector driving the market as at this time. And knowing fully well that the banking sector, give the deliverables from the banking sector is being the most fantastic among all other sectors in terms of dividend payout and the time of delivery as well. But today, in terms of volume, Gedeku seems to be driving the market as it has traded over 25 million shares at a value of about 22.6 billion. So the total value traded so far for the day is well above 4.7 billion. And this is quite an unusual trend, and it is to tell us that the belief in the market is still very, very strong, and the sentiments are still very high. And though it's an unusual occurrence at this time, because the postulate everyone was having before now is that by this time the market will be down. But good as it is, I think we are definitely overriding that, and the market is good for it. So we are still hopeful that before the close of the year, that the market must still have a way to get into the 50,000 basis territory.
And the NGX still beating expectations and forecasts at this time. What are you seeing for a close of trade today?
Well, the market has started very well. The banking stocks are pushing very strong. And I think the only major laggard for today, which has at least some sizable capitalization, is Presco, which is down now by about 2.99%. But I want to believe that the bulls will override the bears today. And so we are most likely to have the market closing positive.
All right, so what stocks are on your radar going into 2023?
Well, there are no other than the banking sector stocks, because they hold a lot of value. Some of them are very much underpriced as at this time relative to the kind of dividend that they pay. And the dividend yield for most of the banking sector stocks right now is still above 10%. So at any time, I will advise investors to really take that to heart, because there's no way they can miss it. If they miss it a bit in terms of appreciation in prices, they can't miss it in terms of dividend payout. So they are good to go.
All right, I guess we're all still looking at that 50K level when we're going to hit it. We'll be watching out for all of that. Thank you so much, Mr. Rotimi Fakejo, stockbroker, NGX Limited. Thank you.
Well,
that was Mr. Fakejo there giving us what's happening on the NGX at the moment. Let's flip over now to the Middle East. We see it's more of mixed sentiment right there in the UAE. We see Abu Dhabi index that's up by 0.09%, while on the flip side, the Dubai index 3,339 points. That's down 0.36% at intraday. Let's move on to other parts we track now. Qatar index, 10,265 points. That's down 0.12%. And we see the Saudi index there just below, inches below the 11,000 level point there, up 0.30%. Let's move on to Europe now. We see the question now, is inflation peaking in Europe's largest economy? For the second month in a row, we've seen producer prices in Germany fell in November, an encouraging sign after more than a year of almost steadily rising costs. Let's talk to DW Stephen Beardsley now. Join us from Berlin to tell us more. Great to have you. What do the new numbers tell us?
Well, producer prices give us an insight into the basic costs of manufacturing or producing something, from the raw materials to the labor cost to the cost of energy. And that, of course, reflects on the price that we later see on store shelves. So that gives us a sign of where inflation tends to be going. Now, when we look at the November numbers, producer prices in Germany were still very high compared to 1 year earlier. In fact, they were up a whopping 28%. But what's interesting here is that for the second month in a row, they were down from the previous month. And that's important because those prices have been rising more or less steadily for almost 2 years now. Now, there's a couple of things behind this that we should point out. One is that natural gas prices have fallen considerably from their highs around summer. That was when there was a real pinch, and nations were trying to figure out where they were going to get massive amounts of gas now that Russia was ceasing deliveries to most European nations. Also, the price of oil has fallen on recession fears, the global price of oil. And then we can't forget that supply backlogs are actually starting to improve vastly. And that's important because even before the war in Ukraine began, which drove a lot of these energy issues, we saw already that as economies were springing back to life, demand was increasing rapidly, and suddenly supply chains were thrown back out of whack after just months earlier they had experienced a lack of demand. And that also drove up the cost for things like labor and for raw materials.
All right, and obviously, consumers globally going through a lot. What does this mean for German consumers?
Well, it's generally a positive sign, and there's also some suggestion that consumers themselves are starting to understand that perhaps inflation is starting to abate somewhat. We've seen that in figures just released today, consumer confidence improved for the third straight month here in Germany. A good sign is always around Christmas. It doesn't mean that items are flying off the shelves necessarily, but compared to the lower values that we were seeing months earlier, it has improved so much, especially as this narrative of the natural gas crunch has dissipated somewhat in recent months. As we've entered winter, instead of fearing what was coming in winter, we have a better idea of sort of where things stand at this moment. I think the sentiment has ticked up a little bit. Now, that said, prices are still quite high here. And just because the rate of interest, the rate of inflation, I should say, is increasing, doesn't mean that is decreasing, I should say. It doesn't mean that prices aren't still high. They are still quite high. You can look at the November report alone that I've been talking about. The price of butter, for example, in November, 37% higher here in Germany than it was a year before. Sugar was up 54%. Fertilizers up 74% compared to a year before. Even durable goods, furniture up 13%. Auto parts up almost 6%. So people are shelling out more for everything from groceries to durable goods. And the thing is, most of them are not earning anymore. So their real wages have gone down. Their purchasing power is still down from what it used to be, and it's still falling. So that still does put pressure on societies here.
All right, pressure on consumers and producers. What can we expect from European markets?
Well, what we're seeing is that European markets were starting out in positive territory. The DAX up by almost 0.5%. Euro Stock 600, we're seeing the same. Futures were up for the FTSE 100 as well. European stocks still remain at 6-week lows compared to where they were recently. They had been riding a recent high based on numbers, but then, of course, some recent numbers coming out, the continual interest rate hikes that we've seen out of the Fed, out of the ECB, putting a bit of a damper effect on sentiment, and then the Bank of Japan decision yesterday to expand its ability to increase rate hikes there, overturning a period of ultra-loose monetary policy. That also dampened sentiment a bit. On the bright side today, Adidas, the big German sports apparel maker, up 4.5% at the beginning of trading, and that because of positive results from its rival Nike. So that has put everyone in the buying mood for sports apparel, and Adidas is profiting out of that.
Yeah, Bank of Japan there stunning the markets yesterday. Thank you so much, Stephen Beardsley, right there in Berlin, giving us the details. Well, let's move on to other markets now. See, markets in Asia Pacific traded mixed after Wall Street ended its 4-day losing streak as global bonds rose after the Bank of Japan adjusted its yield curve control tolerance. Japan continued its second day of losses as Nikkei 225 there dropped 0.68%. Shanghai Composite at 3,068 points. That's down 0.17%. We see the HSI there, 19,160 points. That's the only green we have on this list, up 0.34%. Kospi, 2,328 points, down 0.19%. And the ASX 200 there, 7,115 points, down 1.29%. Moving on to other markets now, we see stock futures traded higher early as sentiment got a boost from strong earnings out of Nike and FedEx. Futures tied to the Dow Jones Industrial Average added 236 points, while the S&P 500 futures rose 0.5%, and the tech-heavy Nasdaq 100 futures climbed 0.4%. Well, let's get a summary of yesterday's close from our correspondent, Maria Bird.
The U.S. stock market ended a 4-day losing streak as the Dow Jones was up by 0.3%. The heavy tech Nasdaq was up just over flat, just a little bit over zero. And the S&P 500 was up by 0.1%. Many investors are watching to see what will happen over the next few days as we come to the close of 2022. Companies like Tesla are continuing to sell off, and interest rate hikes are continuing, expected to become flat in 2023. This is all good news for many investors that are looking forward to ending 2022 and hopeful that 2023 will mean a stronger U.S. stock market.
Yeah, I guess every investor looking out for that. Let's move on to the commodities market and see oil prices rose after data suggested a larger than expected draw in U.S. crude stockpiles. Gains were capped by growing concerns over demand in China and a snowstorm that is expected to hit U.S. travel. Brent crude futures were up about $1.18 to $81.17 a barrel, while the U.S. WTI crude futures gained $1.02 to $77.21. Both contracts had risen by more than $1 early in the session. U.S. crude inventories fell by about 3.1 million barrels in the week to December 16th. And we see market analysts there citing data from the American Petroleum Institute, with 9 analysts polled by Reuters had forecast a drop of 1.7 million barrels. That's according to official data, and that's due later on. And gold prices eased in a tight range today as the U.S. dollar firmed, although the bullion was not far from a one-week high scaled in the previous sessions as traders looked ahead to impending economic data later this week. And spot gold fell 0.363% to $1,812 per ounce after rising more than 1% on Tuesday on the back of a dip in the dollar. U.S. gold futures eased 0.2% to $1,821 per ounce. The dollar index was firm on the day after a yen-driven fall in the last session following a Bank of Japan surprise policy tweak. I'll take a break now. When we come back, more stories on the African continent. Do stay with us. Welcome back now to our next conversation. We'll be talking about agile data, looking at the prospects and development in Africa. We're joined by Dr. David Ameyo now, the President and CEO of the International Center for Evaluation and Development. Great to have you on the program.
Thank you very much, and happy to be on the program again.
Fantastic. So, Dr. Ameyo, tell us exactly what agile data is and how the concept helps with approaches and innovations for monitoring.
When we talk about agile data, we are talking about a process where data become usable in real time at low cost and also to support decision making at all levels. And what do I mean? By using technology and innovation, we are talking about a process where we can collect data in real time, very low cost, be able to analyze the data, and for it to be able to use to make a real-time decision. So, for example, when we talk about agile data in agriculture, we are talking about giving farmers information throughout their seasoning of farming. So when they are doing land preparation, crop growth, crop care, harvest, or production, we are giving them information to make real-time decisions that impact their farming system. And that is what we call agile data.
And how is it different from other forms of data?
Normally, we have three forms of data. We have what we call descriptive data. That is when we look at data and ask ourselves, what happened? That is after the fact. So let's say that there is a low harvest in Nigeria. It is after we have done the harvest, then we said, what happened? Maybe there wasn't any rainfall, maybe the soil fertility was not good. So we use data on descriptive. At times also we use what we call diagnostic analysis. Why did it happen? Why didn't we have bumper harvest? That is descriptive. Then we have what we call predictive analysis. And what will likely happen? It's a guesswork. But agile data talk about prescriptive analysis. How can we make it happen? So let's say that farmers have prepared land, and we know the hectares or acres of land that they have prepared. Immediately, we can make decision on what tons of improved seed would they use, what tons of fertilizer would they need, how is the rainfall coming. So we can give them information in real time for them to make decision, do we plant this one or not to plant this thing. So agile data encourage what we call predictive analysis instead of descriptive or diagnostic analysis, which always use. So for instance, when we are doing farmers household survey, we always go to the farmers after they have done their harvest, and then we base on the data on record. How many land did you cultivate? How many fertilizer did you use? How many seed did you use? Did you use this herbicide or insecticide? No. Agile data collect the data when it is happening so that we can help the farmer and we can help the decision makers, the extension of officers, the ministry to be able to know how do we make it happen. That is the uniqueness about agile data.
Yeah, quite unique. But what kind of partnerships do you think is needed right now to push adoption of this form of data mining?
Yes, currently we are working on a 5-year process that is being funded and supported by Bill and Melinda Gates Foundation. And we have 3 organizations that have come together in developing countries. We have what organization called COSA, Committee on Sustainable Analysis, based in US. We have the International Center for Evaluation and Development that works in 22 countries, which I'm the CEO and the president. Our head office is in Kenya, and we have offices in Ghana and Nigeria. And then we have GDI based in India, who are in charge of Asia. These 3 organizations, supported by Gates Foundation, are developing the process using technology, be able to come up with the process where data can become so agile at every level of decision making in agriculture value chain.
All right. I want to thank you so much. We'll keep watching out for the agile data use right here in Africa. Thank you so much, Mr. Dr. David Adeo, President, International Center for Evaluation and Development. Thank you so much for coming on.
Thank you. I appreciate it very much.
Thank you. All right, now let's move on to all the stories now. See, South Africa's President, Cyril Ramaphosa, has been re-elected as an African National Congress president for a second term at the party's 55th National Conference against main rival, former Minister of Health, Dr. Zweli Nkize. The country's economy has been struggling even before the COVID-19 pandemic, and the governing party's new leadership has a challenging journey ahead, with the country's high unemployment rate, ongoing power outages, and corruption amongst the key areas they need to focus on, especially with national elections coming up in 2024. Our South Africa correspondent, Brian Fageni, has more.
Ramaphosa's re-election as the leader of the ruling African National Congress comes at a time when the country faces poor delivery of basic services that led to its worst election results in history. He once again outlined some of the economic challenges which lay ahead and need to be tackled.
If the ANC is divided, it will never be able to build an economy that can create jobs. We need, yes, to act with resolve, to ensure that we address the turmoil, for instance, of load shedding that is taking our economy backwards. We also need to remove the obstacles to faster economic growth and job creation. We need to act against those public representatives and officials who are delaying vital reforms that we need to build a thriving economy.
Or what the Commission will be recommending, and what has been the debate, is that government must continue to utilize the fiscal policy to intensify the fight against poverty, inequality, and also hunger. So those are some of the issues, and utilize it as a tool to spend money in areas where it can grow the economy.
The country has witnessed record load shedding. Unemployment rate is still high at 32.9%. The repo rate is now 7%. While headline inflation sits at 7.4%, which is higher than the Reserve Bank's target of between 3 to 6%. What implications will Ramaphosa's re-election have on the economy?
The first I've mentioned is to continue doing so quite vigorously, to ensure that the resources that are generated from taxes are appropriately spent and don't get siphoned into connected politicians' pockets, is to implement massive infrastructural investment programs that have already been announced but are not actually being executed. There is a massive opportunity for South Africa to turn around its economic fortunes by embarking upon these programs. The magnitude of these programs is huge and could make a tremendous difference, not only to potential service delivery, but immediately in terms of job creation and economic growth. And this could if it succeeded, end up in a virtuous circle of higher economic growth and more investment generally.
I will imagine that there will be some moments of reflection in terms of how do we improve from the successes that we've seen, but more importantly, how do we continue to get the whole country to rally behind these reforms that the president has initiated and has undertaken.
Hopefully, those reforms will not be stalled by the president's Phala farm theft scandal, which still hovers over him, beyond the ANC's conference, which didn't make room for it to be addressed for now. The rand rallied by about 2% when the announcement of Ramaphosa's re-election was confirmed, and some say this is a clear sign that this is what the economy needed. The country goes to 2023 at the back of a challenging 2022, but there is hope amongst others that the upcoming year will bring much-needed economic relief. From Johannesburg, South Africa, Brian Pugeni, Channels Television News.
All right, to all the stories now. So Algeria's non-oil exports exceeded $6 billion in a period between the beginning of the year and the end of November, highest achievement in the country's history since its independence from France in 1962. The trade minister attributes the growth to recorded by several local industrial sectors, as well as the quality of exported products did add to this projection we saw in their markets. Moving on now, we see Ghana's economy grew 2.9% in the 3 months through September, which beat economists' forecasts, but was still the slowest expansion in 2 years. Growth has slowed from a revised 4.7% in the second quarter, according to the Ghana Statistical Service. And that's it on Business Incorporated. Thank you for watching. I'm Ladi Williams. Bye for now.